The RBI's MPC has marginally revised the GDP growth projection upwards to 6.5% for the current financial year of FY 2023-24, from its earlier estimate of 6.4%, reflecting the resilience of the domestic economic activity. This means that the Indian economy is expected to grow faster than most of the leading forecasters had predicted. What are the factors behind this optimistic outlook? One of the main drivers of growth is the domestic demand condition, which remains supportive of economic activity. The RBI Governor Shaktikanta Das said that rural demand is growing while urban demand remains resilient. The higher Rabi crop production in FY 2022-23, the expected normal monsoon, and the sustained buoyancy in services should boost private consumption and consumer confidence in the current year. Another factor that is expected to nurture investment activity is the government's thrust on capital expenditure. The RBI governor said that the moderation in commodity prices and robust credit growth are also conducive for investment. The gross fixed capital formation, which measures the investment in fixed assets such as machinery and buildings, rose by 11.4% in FY 2022-23, raising its share in GDP to 34%. The highest since FY. However, there are also some risks and challenges that could hamper the growth prospects. The RBI governor cautioned that weak external demand, geoeconomic fragmentation, and protracted geopolitical tensions pose risks to the outlook. He also said that the headline inflation is above the target of 4% and expected to remain so during the rest of the year. The high inflation could erode the purchasing power of consumers and affect their spending decisions. Therefore, the RBI has decided to keep the policy repo rate unchanged at 6.5%, which is the rate at which it lends money to commercial banks. The RBI has also decided to focus on withdrawal of accommodative stance, which means that it will gradually reduce the liquidity support and stimulus measures that it had provided to cushion the impact of the pandemic on the economy. The RBI said that this decision was taken with a view to anchor inflation expectations and ensure price stability. To sum up, the RBI's MPC has revised up its GDP growth projection for FY 2023-24 to 6.5%, reflecting a cautious but bullish outlook on the Indian economy. The domestic demand condition, the government's capex push, and the moderation in commodity prices are some of the positive factors that support this outlook. However, there are also some downside risks such as weak external demand, geoeconomic fragmentation, geopolitical tensions, and high inflation that could pose challenges for growth. The RBI has maintained its policy repo rate at 6.5% and decided to focus on withdrawal of accommodative stance to balance growth and inflation objectives.